Okay. Wow. This is definitely the biggest crowd we have ever had, ever, anywhere. Yeah, for an après-midi. And I guess I have Jonathan Hadida to thank for that, and the subject of taxes. Now, he will tell you the subject is boring, but clearly for you it is not, because it's really, really important to all of us as expats. Everybody in this room, everybody's not pretty much non-French, American, Canadian? Uh-huh. What else? Australian. Okay, so just so you know, Jonathan's gig is mostly American. Okay, just so you understand, it's going to be mostly, right, devoted to American taxes. But I'm just going to let him have the floor. You're going to speak for about...
Oh, I'm going to speak until you guys don't want me to speak anymore. Because
No, you can't.
2 hours, not more than 2 hours. I'm going to speak, and we'll take your questions.
Take Q&A.
We'll take Q&A as we go, and we'll take it from there. But
we're only going to go to 4:45.
That's right, because Adrian has to leave at 4:45.
Because I have to leave at 4:45. Okay, then you guys can hang out. Also, just so that you know, when they bring you the drinks, you're going to be paying for them directly. Okay, on that note, Mr. Jonathan Hadida.
All right, but before we start, Adrian, before we start, I just want to get a selfie of you.
We didn't get one.
No, we didn't get one before. We're going now.
Okay.
Thank you all so very much for coming to a topic that I truly, truly believe is the most amazingly boring topic in the world. And I will try my best to make sure you all don't fall asleep because it's hot and whatnot. So I will do my best to make it as enjoyable as possible. Okay? I am really excited to be here. As I told you all before, and I'm going to put this onto the video because I need to make sure my wife sees this, I have a simple rule when I give a presentation. And it's the simple rule that I've learned by being married to a woman who's much better, much prettier, much more impressive than me. The rule is ask your questions. And I will talk about whatever you guys want me to talk about. I have slides. They're fun. They're exciting. They're flamboyant. But if it does not touch on what you guys want to talk about, I will not touch on them. Okay? So before we get started, just a show of hands. How many of y'all are still working here in France? Okay, cool. So it's not going to be the majority of my conversation. It's going to talk to you guys about the repatriation regime and how to reduce your taxes from working. How many of y'all are retired Americans in here? Mazel tov, great. Welcome to France. You will pay less taxes than if you stayed in Sacramento. You will pay less taxes than everywhere. It is Florida without the swamp. Okay? Pardon me. So, welcome, bienvenue. And as Adrian says, you've made the right choice. Because Nice is magnificent. Even though I still think Antibes is quite cool. But that's not here nor there. So, a little bit about me. My name is Jonathan Hadida. I am the founder of Hadida Tax Advisors. We are a small US and French tax firm specializing in Americans living abroad. We only work with Americans living in and around France. Sorry. We only specialize in Americans. We do the American tax returns and your French tax returns. We only do individual taxes. Why do we only limit ourselves to this? Because I wanted to, and it's my show, so I decided it. So, we have team members in America. We have some team members in France. We have a couple of team members who even sit in Switzerland, the poor buggers. Basically, that is us. Again, we can help with the American returns, the French returns. A little bit more about me, just a couple of impressive things. As I said, my wife is much too pretty for me. She is much too smart for me. God knows how I married her. The good Lord knows. I have 3 young boys, 13, 11, and 7. Also, much better than me. They'll come out here. My son Apre at his bar mitzvah came out. He gave a speech in front of the whole synagogue. He was like, and now let me talk about my mother. She is the greatest. And he went on. He made jokes about 5471s. He made jokes about PFIX. Brian Dunhill, who was in the crowd, was applauding and saying, I need to hire this kid. It was magnificent. And last but not least, the most impressive thing about me, I have 300-day streak on Wordle this morning, and keep on going. So that's base good. So without further ado, what are we talking about today? We are going to talk about 7 things. Maybe a little bit more, maybe a little bit less. The first thing I've added here is the One Big Beautiful Bill. I just want to talk about the couple of things on the tax side on it. I will say it is better for you than I thought it was going to be. I was expecting it to be bad. It's not that bad. So, talk about French residency. Who is a French tax resident? What does that mean to be a tax resident? We're going to talk about how do you avoid double taxes, some filing considerations, blah, blah, investing. Again, it's on my slides because Brian Dunhill wants me to have it on my slides, and if I don't, I'm contractually obliged to have it there. France does not trust trusts. How many of you guys have trusts?
Almost everyone.
Okay. I am going to make you all very unhappy today. I'm going to set that up from the start. You're not going to like what you're going to hear about trusts. And I'm sorry, but it's the rules. But it's more important for you all to understand it. And then we're going to talk about inheritance and gifting. Okay? If we have some time in between, we'll talk about whatever else you all want. Okay? Again, the number one rule is please ask any questions you have at the time. It's you know, if you say I'll ask at the end, you'll forget what the question is. So again, whatever question you have at the time. So, without further ado, the One Big Beautiful Bill. The One Big Beautiful Bill had three main things for you guys. Okay, the three main things that affect some people in this room. Should not say everyone, but some people in this room. First and foremost, 65 years or over, you now get an additional $6,000 credit, deduction, a taxable deduction. Now, you may have received an email from the Social Security Administration saying you will pay no taxes on your Social Security. That is actually the reason why I'm here today talking, is because Adrian got that email. She sent it to me, said, Jonathan, is this true? I said, not really. She said, we need to tell more people about this. So she booked me, and she told me to come to Nice. So I came to Nice. But basically, you get $6,000 more per person if you're over 65 on top of your standard deduction. So the standard deduction is in the $30,000 range. If you're married, it's now going to be in the $43,000 range. What's that beeping?
I have no idea.
Just a quick question. Rather than me try and take notes, is this going to be on Adrian's slides? Your
Yes,
slides gonna be on
yes,
They're
it's being
videotaping
recorded. It's
Whatever.
being recorded. You can watch it all again.
But basically, you're going to get an additional $12,000 deduction if you're married on top of your standard deduction. Okay? So that's number one.
I don't know what that sound is. Well, yeah.
At first, I thought it was me, but
It's downstairs. I don't know. We can't. We're gonna have to ignore it.
okay. Number two, charitable deductions. You could gift up to $1,000 per person, $2,000 per couple, and get a deduction irrespective of whether or not you itemize or you take the standard deduction. Most of y'all in here do not have state taxes anymore, might not have mortgage anymore, won't have real estate taxes. So you're probably going to take the standard deduction. So giving to charity, honestly, without this, from a tax perspective, why do it? Okay, now someone's going to cut that and say, Jonathan says he's anti-charity. I'm very pro-charity, but from a tax perspective, it does not have a benefit for you. Now it does. You can get up to $2,000, depending if you're married filing jointly, as a deduction for charitable. They have to be U.S. charities, okay? And as we're going to talk about later, you guys do not, okay, I'm going to phrase this very carefully. From a tax perspective, you're better off giving to U.S. charities. Please note, everything I say is always from a tax perspective, because I'm going to talk about investment stuff in a minute. It's from a tax perspective. We had an investment advisor in here a couple years ago who basically jumped down my neck and said, that's just bad advice. I'm like, why is it bad advice? He goes, well, because what about this from the investment perspective? I'm not the investment guy. I'm a tax guy. So everything I say is a tax thing. So please take that with a grain of salt. Lifetime gift and estate tax exemption, $15 million. Basically, if you pay estate taxes in the United States, I say congratulations to you, sir, madam. As simple as that. If you pay it, that means you have a lot of money. Okay, so $15 million per person. Okay? So basically a couple is $30 million. And it's going to go up with inflation. This is the thing that I was most worried about on the One Big Beautiful Bill. And it honestly came out to be a goodish, a nothing. A 1% remittance tax. This 1% remittance tax only applies to money transfers, cash transfers. I'm going to be very indiscreet here. I call this the maid tax. It's not going after most of you people. Unless you guys need to go to Western Union and transfer money abroad or have your kids transfer money abroad to you, it's not going to apply to you. It only applies to cash. It does not apply to transfers within a bank. I was worried, the initial bill was, it looked like it was going to be for all transfers. I had Brian Dunhill calling me saying, Jonathan, we're going to have to tell all our Americans to get their money out of American banks. And I'm like, let's wait and see. And this is what we got. It's cash only. Cash, money orders, blah.
Cash at an exchange station?
No. What I mean is you go to Western Union.
Western Union.
You
yeah.
say, hey, I want to send this money to someone in France. They may charge you a 1% remittance.
But if you do through your bank.
Okay, but if you're going through Money
If you're going through Money
any of our
Corp, you're going through your
brokers,
bank,
no
it
problem.
does not matter. Yes, ma'am.
When someone asks a question and you answer no, could you repeat?
Yes, ma'am. Yes, absolutely. Adrian's question was, if you transfer money within Money Corp or from a bank, does it apply? So, and thank you very much for telling me that. Does it apply? The answer is no. It does not apply if you transfer money to Money Corp, if you transfer money to Revolut, whatever. Wise, yeah, thank you. I couldn't remember that. But basically, long story short, cash only. So, win. This is a win. This was the biggest thing that I was worried about on this act when it was in pre-publication. It came out to be nothing. Okay? So long story short, for most of y'all, this should not be an issue. Okay? But if you have to send money by Western Union, I don't know how they're going to do it, but they may charge you this 1% remittance tax. Okay? That's the one big beautiful bill. Any questions on any of that? Yes, ma'am.
You need to repeat.
Are the changes effective on the 2025 tax year? The answer is yes. So everything that I talked about here, the $6,000 per person, 25. $2,000 charitable, 25. 15 million starting in 26. And then the 1% remittance starting in 26. Yes, sir.
So I see wire transfers sent from a U.S. bank, but this does not apply to that. What about wire transfers from a U.S. bank to a French bank?
Does not apply to that either. If it's bank, the question was, do wire transfers apply? The answer is no. A wire transfer from a U.S. bank to a French bank, it does not apply. So basically, unless you're sending, again, it really, to me, is it's going towards cash transactions that could potentially be undocumented. So that's basically what it's going for. But it's not going towards transfers to Money Corp, not going to anything like that. Okay? Any other questions on this bill?
No, let's move on.
Okay, let's move on. French tax resident. Am I a French tax resident?
Yes, sir.
I'm going to answer the question very quickly. For you guys who are Americans, honestly, it doesn't matter. Because we have the bee's knees for American retirees, the U.S.-French tax treaty on our side. Therefore, you will file as a French tax resident. You will only have to pay the tax preparation fees, provided you don't get a job at the McDonald's or come work for Adrian. Yeah, you never know.
Yeah, true.
They know the region.
They-
they know the region better than me. So, am I a French tax resident? This is a question that people ask us all the time. Okay, the main things, the answer is always it depends. Okay, always it depends. If I ever say yeah, absolutely, I'm wrong. But it's a facts and circumstances question that we have to look at your situation in itself. Okay, so if someone moves, let's say from Atlanta, Georgia, and moves to France in July, that person is more likely than not a tax resident. Okay? To be clear, we have to look at your situation. Similar situation. Person moves, spouse does not move. The spouse may not be a tax resident. Again, facts and circumstances. Everybody's facts and circumstances differ. So we have to look at everybody's case on a one-by-one system, okay? And the way we look at it is we look first and foremost, where is your principal residence? Where does your family sit down and have dinner? Okay? And to be clear, your family, unless your kids are my kids' age, your family is you and your spouse. Okay? Where do you and your spouse sit down and have dinner? Where do you guys make your center? Where do you make your life? If it's in France, you're probably a French tax resident. Okay? In certain cases, we have people who also have an American house. So then we look at the second criteria. Where is your professional activities? Where's your center of vital interest? The main one we look at is where's your center of vital interest. If you live in France, your center of vital interest is in France. okay? And if you're a center of vital interest in France and you're a French tax resident, that means you have to file a French tax return. Simple as that. The only potential downside of being a French tax resident, and we'll talk about it later, is dying here. It's as simple as that. France is magnificent as long as you're alive.
But what about the 183-day tax rule?
The 183-day tax rule is a great question because it depends on the country. In some countries, it is a great rule. It's a vital rule. In France, it is just part of the equation. It is not the end-all, be-all. So you could be in France for 185 days. It does not mean you're a French tax resident if you have ties closer to America, if you have your life in America. So you have a home in Chicago, you spend most of your time in Chicago, but 1 year you stay longer in France because you want to go see a regatta, you want to go see a concert. Okay, good. Mazel tov. You may or may not be a resident. Again, everybody's facts and circumstances are case by case. Okay? And everybody's circumstances will change year on year. Because again, 1 year you may be here 100 days. Next year, 250 days. Well, that year where you're here 250 days, you may have broken the residency rule for yourself. Again, this is one of those things you want to look on a case-by-case basis, but literally once you become a resident, you're probably a resident for good. Yes, ma'am?
What happens if you came in the middle of the year and are indeed living here and have all your everything?
So, the question is, what happens if you came in the middle of the year? Okay? Again, you move from Atlanta, Georgia in May. You bring all your stuff over, you buy a house somewhere in Nice. You know, you buy a nice little villa. Adrian and her team were telling me about a studio, 34 square meters, 160,000 euro today. I was like, holy crap, it's so cheap in this city. So lo and behold, you can go out and buy multiple villas. So you go out and buy multiple villas here in Nice, right? You are probably a tax resident. Now you come on June 1st. That means you have to file a tax return reporting your income from June 1st onwards. It's very important to understand. France treats you like you would treat a new boyfriend or a new girlfriend. Anything that happened before, they don't want to know about. So long story short, it will not matter. Okay, so you'll need to just keep that in mind. So long story short, again, you come June 1st. From June 1st onwards, all your income is going to be subject to tax in France. What happened before happened before. Okay? Yes, ma'am. I'm sorry. Oh,
So we go back and forth kind of randomly.
yes.
How do we
So you go back and forth.
consult you every year?
Maybe. You go back and forth randomly. What happens? The question comes down to where's your center of vital interest? Where are your doctors? Where is your pickleball club? Where's your canasta club? Where's your church? Where's your synagogue? So on and so forth. So really, it looks at your real full fact set. Okay? If France is really just a vacation place, because again, I'm looking to buy a place in Antibes. Okay? Adrian says to me, Jonathan, Antibes is perfect for you because you're looking for your Miami. I'm looking for Miami. I'm not looking to live in Miami. No one should live in Miami. So basically,
Okay, I'm going to give you can I ask a reality question?
a reality question.
Okay, she goes back and forth.
Yes, they'll
Okay.
never catch her.
They're retired. They have no income in France anyway.
Yeah,
Okay? So,
it's bad
I
luck.
mean, I know you cannot advise not to do a tax return.
No.
You cannot.
I would not.
Okay? You cannot.
It's bad luck if they catch you.
I'm just saying.
She's just saying.
Yeah.
Okay?
Honestly, the only chance that the French tax authorities would potentially come knock on your door is if you throw a party too loud and you don't invite your neighbor, and your neighbor's a tax inspector.
I
But-
mean, honestly, in all honesty, but it's not going to owe a penny to France anyway.
Yes, but if you want to get into the system, if you want to be kosher, because we should be kosher, we should all be compliant and all that.
Agreed.
It's fine.
Because ultimately, if she wants a carte de résidence,
Yes.
okay, ultimately, if that's what she wants, then yes, she needs to
Yes.
prove that she's been in France.
Yeah.
I'm just saying.
Yeah. Long story short, it looks at your center of vital interest. Where is your life? So if your life is more in America, you're probably more an American resident and not a French resident. But it really depends. Because again, let's say you come to France and you all of a sudden you have 5 doctors here in France and you have your church and you're a member of the canasta club, blah, blah, blah. you're probably a French resident. It's
You have the same in the U.S.?
if you have the same again, it looks at it's a case by case basis, and it's honestly it's not that simple to answer because if it's a tie, then we look at nationality, and well, first we look at where you spend most of your time, and then we look at nationality. So again, there are various factors that we look at, and it's really not that simple to answer this question. Every case is different and depends on your specific facts and circumstances.
So the point is to ask an advisor.
Yes, the point is to ask an advisor. So this is how I make more money, people. Ask an advisor. Help me feed my kids. Yes, sir.
If your income is, if you're in France, but your income is totally U.S. income.
We'll talk about that in a minute, my friends. You've gone too far. Yes, sir.
How do they know?
That's a good question.
How do they know? They know credit card transactions. They know banking records. They look at where you are. They could find out. They could find out. Honestly, the way that they now are finding out is quite simple. You go in your déclaration d'occupation de biens. You go in and you say, I own a house in Nice. Is it my principal residence? Yup, it's my principal residence. Well, shoot. You've just told them it's your principal residence. It's, again, they're not silly. You know, I have two clients in Paris. One woman lives here. The other woman argues she doesn't live here. Wanted to argue she didn't live here. She says, Jonathan, I don't live here. I said, okay, cool. I said, give me 1 second. I screen shared. I went onto her Facebook, and I started scrolling on her Facebook. There's you on the Seine. There's you in front of the Eiffel Tower. There's you at Adrian's Apre Midi. Well, shoot, you're a French resident. It took me 1 second of doing that. My wife and my staff who was on the call thought I was a bit weird and stalkerish. She's going, you can't really look at your but that's what they can do. So long story short, it depends. If you go off on your Facebook and go, Nice is the greatest place ever, I'm never going to leave here. But again, they're going to use AI. They're touting AI. And again, we're going to talk about it in a second. Honestly, it really does. If you're planning to live here and you're planning to make this your home, it doesn't generally matter being a resident. Yes, ma'am.
Why I think it might matter is I have a house in the U.S.
Yes.
And that I haven't sold yet.
Yes.
And I don't have a house here.
Yes.
I just am renting.
Yes.
But I'm wondering about capital gains then when
Yes.
I do sell.
New
There
question.
you go.
New question.
She got it. She got it. The two reasons. Okay, now I'm going too far in my presentation. I'm rooting from the back end. But the question is, why would you not want to be a resident? Two reasons people don't want to be residents. One, you have a house with a bunch of capital gains. If you have a U.S. house with a bunch of capital gains, you may pay French tax on it. I'll cover that more later. May. The second one is inheritance. You probably would not want to be a French tax resident because of the inheritance. So in a situation where you're 50-50 on the fence, you probably want to argue you're not a French tax resident. I don't see him.
Who?
Bruce McBroom?
No, I didn't see Bruce either.
No. Long story short.
Yeah, but I'm a perfect example of tax residency issues. But you're going to do that down the road,
I'm going to do the
right?
inheritance stuff later.
Yeah.
So long story short, those are the two main reasons. The only two reasons that you may not want to become a resident in France as a U.S. retiree, again, proviso, every case, and to be honest, every case is different. Sale of a home in America, inheritance. Those are the two main reasons why you may not want to become a resident here. But other than that, while you're alive, if you don't have a house in America, Mazel tov, welcome, no problem.
But good if you sell the house before.
We'll cover that. I have whole slides on that.
Go for
Slides
it.
and slides.
Go for it. Go for it.
Yes, ma'am.
I read somewhere that once you've got a long stay visa, they consider that.
She went on Facebook, and on the Facebook group it said, "You got a VLSTS, you're a resident." The answer is no.
You're a resident, but
No,
wait.
but again,
she's a resident, but she's not a tax resident.
Exactly. There's tax and there's immigration. There are various things. So you have to understand. To be clear, every case is special. Every fact and circumstance. So I'm not saying you're not a resident because I don't know your case more than that. But having a visitor visa does not automatically make you a tax resident. Again, in France, bienvenue en France. La main gauche ne parle pas la main droite. Does everyone understand that?
Yes.
Ça, c'est le problème. The immigration folks and the tax folks, they do not come together in happy unity and talk about this stuff. So,
Fortunately.
yes. long story short, the answer to your question is no.
Once you've got it validated and stamped, no.
Not guaranteed. Maybe is the question. It depends is the answer, because again, facts and circumstances, we have to look at your life, your stock. But it does not automatically. I've got people who got a long stay visitor visa. They come for 4 months, they leave for 8 months. They come back for 4 months, they leave for 8 months. They're not residents.
Tax,
Okay.
they're not tax.
They're not tax residents.
residents.
Yes, sorry. Again, everything I talk about is tax. Yes, ma'am.
But wouldn't that interfere with their renewal?
It may. That's an immigration question outside of my scope. Outside of my scope. I leave that to the immigration guys to figure that out. I'm just answering from a tax perspective. You're not absolutely guaranteed. There's a presumption that you are. Because again, you're getting a long stay visa, but it does not mean you're there are facts and circumstances. Every case is special. Okay? Yes, ma'am.
I have a question. In this example that lady just gave, is that possible to become opportunistically not a resident for the year you sell your residence in America?
But we'll cover that in a second. The question was, can you sell, if you're going to sell the house, we're going to cover it. Could I answer your question later? Her question is going to be answered later. Because I got to move on. Adrian's telling me to move. Sorry.
What do you need to file, if anything?
Oh, we're getting.
If you leave France.
If you leave France and you file as a tax resident, there are 2 forms to file. One is a final year tax return, saying that you're leaving, and there may be an exit tax return to file. This is outside of the scope of this conversation, the exit tax. It happens very, very infrequently because you're American citizens, and it requires big hoops, and it requires you to be invested in
It
France.
happens frequently or rarely?
Infrequently.
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 Okay, I heard frequently.
Rarely. Sorry, it does not
Okay.
happen often. We've had one client do it in the last 5 years, and that was
Nobody leaves, that's why.
they had a special set of circumstances.
Okay.
Facts and circumstances. So the answer is exit tax maybe, but very rarely.
But if you're French American.
Doesn't matter. Ça change rien. Doesn't matter. Okay, gotta move on. I've got to move on.
Because there's going to be a lot more questions.
There's
you know.
that's all right. All right, folks. Here is why being a French tax resident is not a problem while you are alive. The U.S.-French tax treaty is the bee's knees for American retirees. It is stupendous.
Do you think it's the best in the world?
I think it's absolutely the best in Europe.
Okay.
While you
Fair
are,
enough.
again, I keep on coming back. While you are alive, this is the best place to be. When you die, don't do it here. But while you are alive,
Unless you prepare for that.
yeah, we'll get to that.
Okay.
While you are alive, your U.S. sourced income, interest, dividends, capital gains, Social Security, pension, U.S. sourced rental income, all gets reported on the French tax return, all benefits from a deemed tax credit under the treaty. You will pay no taxes here in France, no income taxes on any of your U.S. sourced income. And here's where the investment advisor jumped up and down and said, what happens if they want to invest in Europe? If you invest in France, there may be tax. But if you invest in America and American sourced investments, and again, I'm a tax guy, I'm not an investment guy, so please do not shoot me the messenger and say diversification, blah, blah. Not me. I'm a tax guy. Talk to Brian Dunhill.
Yeah, but it's a good reason to own property in a
There's a great-
euro asset.
Absolutely.
That's
But
right.
if you have any investment questions, my friend Brian Dunhill, I sent him a picture saying, look, Brian, standing room only. You didn't get standing room only. So he'll be really happy to hear. Remind to tell him how much more enjoyable it is to listen to me talk to him. So, yes, ma'am.
With regard to capital gains.
Yes.
If residence in the U.S., meaning a home that you own is considered an investment property, and you sell it, does that count as capital? No.
No. So the only case that's different is the sale of real estate. And the sale of real estate, I'm going to jump to the sale of real estate now because we need to talk about the sale of real estate. Ah, no, I went too far. Sorry, I knew I didn't know what I was doing. Hold on. Where the heck is it? Adrian, do you know where it is? I don't know. Sale of real estate in France. Let's talk about real estate because it's an important one. So, to be clear, real estate in Nice is not expensive. Go out and buy a piece of property in Nice because it is not cher. Ce n'est pas cher du tout. I can tell you all this because I was looking for a property in La Grande Motte and Gros-le-Roi. Adrian kept on telling me, "You're crazy, Jonathan. It's horrible. You should come to Nice."
I didn't say that.
Yeah, she said. She said you should come to Nice. You should come to the Côte d'Azur. I said, "Okay, Adrian, let me see." Long story short, I thought to myself, my gosh, I'm not as rich and as powerful as Adrian and Brian. I don't have their money. I'm a poor tax guy. Long story short, my goodness, folks, it's not expensive. So call Adrian and her team because they will help you get a property. So coming back to the sale of property, okay? The sale of property in France. The sale of property in France is subject to taxes up to 36.2% on any capital gain. The 36.2 is 19% income tax, 17.2 social taxes. That tax goes down the longer you've held the property. So this is why my answer to all the questions is it depends. The longer you've held the property, the less the tax will be. So if you've held the property for 22 years, you'll pay no income tax.
But Jonathan, it's not on a principal residence.
No, but
There's
it's
no capital gains tax on
no,
a principal residence.
Sorry, but I was talking about the American properties when they moved.
But
if they
this
moved
says
here.
property in France. When you sell your property in France.
Sorry. Okay. To be wait, where does it say that?
When you sell your property in France.
The comma's in the wrong place. You sell your property in France.
Oh, when you sell your property and you live it. Yes. Thank you very much. I will fix that. I will fix that.
Yes.
I'm sorry. This is why I don't use slides. It makes me no. Hey, but basically, taxation in France is based on whether the property is your principal residence and how long you held the property. If it's your principal residence, it's not subject to tax. I apologize. I got ahead of myself because I was answering the American questions.
Are we talking French property or US?
Both. Both. But to be clear, if you're going to sell your property in America and you're a French tax resident, it's probably no longer your principal residence at that juncture. It's probably hard to say that my house in Delaware is my principal residence, but I live in France.
Well, not unless you have two at the same time and you're selling it.
Yes, but again, facts and circumstances.
Okay.
Facts and circumstances. So to be clear, you buy a house in Nice, you sell the house in Nice, you move up, you upscale because Adrian will upscale you. You will not pay any taxes on that sale. That said, in the situation that the lady over there, sorry, ma'am. I don't mean to be disrespectful. Sorry, I apologize. In the situation that she brought out, which is you live in France and you have a house in America, and the situation that over there, you have an investment property in America. Okay, so you have a couple of investment properties in Atlanta, Georgia, and you keep them and you want to sell them after you're a resident in France. France may tax you on those sales, up to 36.2%. It goes down the longer you've held the property. Okay, you will get a gain. Everything's on the gain. You will get a credit for any U.S. taxes paid. Okay, so again, depending what U.S. tax you pay, it'll go down. So the U.S. and French taxes even out at about year 20. So if you've held the property for about 20 years in America, it'll be about the same taxes in France. Long story short, if you hold real estate and you sell it, there may be taxes in France. Yes.
No, you answered my question.
Magnificent.
I know it sounds like a odd question, but how would the French know that?
How would the French have? Great question. And this one here, I have an answer that even Adrian won't be able to tell me. No, they won't know. How will France know that you sold the property? Okay, it's actually relatively simple. If the French authorities ask to see your U.S. tax return, it'll show up on your U.S. tax return. They'll see a gain. If you don't report that gain to France and they see it on the U.S. tax return, well, you're up a creek. So that's how they'll find out. And with the exchange,
they will impose an 80% fine on non-disclosure.
Exactly, up to 80% on non-disclosure.
Yes.
So it's really one of those things that you don't want to mess about.
I know that because it happened to me.
Really? All right. Well, there you go. There you go.
It wasn't, but I didn't have non-disclosure, so they removed the 80% because it had been disclosed. But that's why I know that's true.
There you go. So basically, it's from your U.S. tax return that they'll know. Yes.
Hey, Jonathan, aren't they, when we file our French tax returns, aren't they asked to see our American tax
No.
returns?
So when you file your French tax return, you don't include a copy of your American return.
No.
The only time we include a U.S. tax return is if you get a request from the tax authorities to demonstrate that the taxes were paid on it. So basically, B's needs for American retirees, interest, dividends, capital gains, blah, blah, blah. You have to prove that the taxes were paid on it to America. So how do you do that? Is you provide your first 2 pages of your 1040. And you only do that when they ask. So we don't do it d'emblée, we don't do it off the jump, we do it only if they ask us to do it. So basically that's the easiest way that we do it. Okay? Any questions? So, yes?
What if you still are eligible for homestead tax, though, in the US, and so you don't have capital gains to pay, and therefore don't have to claim it on your taxes?
You do have to claim it on your federal taxes. Even with a homestead, you have to file it on your federal taxes. In homestead state by state, and every state has their own special homestead. Homesteads are tricky because technically you should no longer be benefiting from the homestead if you live here.
Well, you have to have lived in your home 2 out of the last 5 years.
No, that's something else. That's another rule. So, what she's asking is the Section 121 exclusion. In the U.S., if you live in a place as a principal residence, you benefit from a $250,000 per person exclusion on the sale of real estate. Per person. So if you're a married couple, it's $500,000 on the sale of real estate. Now, okay, let's give the situation of my friend Bob Smith. Bob Smith moves from, don't worry, Adrian, we'll be good on time.
No problem.
Bob Smith moves to France today. Okay? He lived in a house in Atlanta, Georgia up until today, and he moved to France today. He rents the house out for the next 2 years. In 2 years, he sells it. He makes $490,000 of gain. Bob Smith has lived in that home 2 out of the last 5 years as a principal residence. Okay, he moves here today. 2 years from now, sells it. We'll go back 5 years. He's lived in it 2 out of the last 5 years. Bob Smith pays no American tax. Bob Smith, though, will potentially pay French taxes, depending how long Bob Smith has held the property and what kind of gain he has on the property. Okay, so that's the thing to just keep in mind and to look out for is you need to look at your situation and what makes sense for you. You know, in a perfect world, I would tell everyone who moved to France, keep your home in America because you never know, even though no one goes back. But even though no one goes back.
No, and you end up paying expensive property taxes and carrying costs for nothing.
No, absolutely. But, you know, you never know. Long story short, American taxes, you can get that $250,000 exclusion 2 out of the last 5 years, but France may tax you on it. So when it comes to real estate, it's something to look at before you come or before you sell. Because again, France may tax you and it goes down the longer you've held it. Again, 20 years is about the break-even point. Okay? Any more questions on real estate? Real estate being the only place where the bee's knees for American retirees does not apply.
I have one quick question.
Yes.
You might handle later. What if you inherit property?
Yeah. And what? You sell it?
And then you sell it. Yeah.
So if you inherit, the question is if you inherit property and you sell it. So I always tell the story of how in America, I had a client many years ago. He came to me and said, Jonathan, my father has this nice piece of farmland. Can't remember where. Doesn't really matter. He bought it for $100,000. It's now worth $5 million, Jonathan. He said, what can I do to reduce my taxes? I said, well, how old is your father? He said, my father's 87. I said, okay, well, what's your father want to do with it? He said, my father wants to gift it to me. I said, well, here's the solution. Let your father die, and then inherit it. And you'll get a step up. You'll get a step up in basis. Okay? That's the answer. So, in a situation like that, you know, $100,000 basis, $5 million fair market value. If he had gifted it to him, holy shoot, $4.9 million.
You would pay taxes in America on that too. Give taxes.
Maybe. But long story short, if you inherit, you get a step up in basis, and France would more likely to not apply that. But that's a question, honestly, the sale of real estate, sorry, just to add to the sale of real estate. How many of y'all worked with Carol Vangioni over here? Not many? Some? Okay. Well, Carol works with Adrian. Carol is very, very nice. She lives somewhere here in Nice. I don't know exactly where. Mougins, wherever that is. Long story short, the sale of property, I don't do it. I can give you the calculation and tell you what an estimate of the tax is going to be, but I cannot file the form. the form on the sale of real estate, if it's in France, must be done by if it's a property in France, must be done by a notaire. If it's the sale of real estate in the US, it must be done by a notaire or an attorney. My team has a French attorney who can assist it with that. So we can help you with that, but it's not me who's going to sign the return. It's my colleague Vincent who would sign the return. Okay? Long story short, if you're selling property in France, you may have taxation here. Okay? Cool. So let's go back a bit. And again, your interest income, your dividends, your capital gains on anything but real estate. As long as it's US sourced, you will only pay taxes in America and only on the federal level. More likely than not. Again, facts and circumstances dictate win the day. More likely than not. Yes, ma'am.
Just one question. US source interest dividends gains no cap limit, millions upon millions? Just checking.
Yeah, there's no cap. It literally is the greatest tax treaty. It is such an advantage. Again, I never understand why someone would live in Delaware, Pennsylvania, blah, 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 and retire when they can live in Nice. My goodness, Nice is the best.
That includes state pensions?
Yes, sir. It includes state pensions as well. It includes state pensions, VA pensions, you name it. Again, American pensions, it includes that. There are very few, I don't have a case in my mind that we don't. Oh, sorry, sir. Wyoming, no, I've got no, there's no, I don't believe there's an issue. Yes, sir. Sorry, I apologize.
Your only income in France is bank interest.
Yes.
You need to file a return in France.
Do you have U.S. income?
Yes.
Yes, you should. Yes, you should file a tax return. Just to be clear, the question was, if you only have bank interest in France, should you file a tax return? The answer is, even if you don't have bank interest in France, you should be filing tax returns because A, it's the law. B, if you want to turn around and get a 10-year carte de résidence or whatever, you want to get citizenship, if they let you all get citizenship now anymore, long story short, you need to file tax returns. You will not pay any taxes. In your case, with the interest question, the answer is you may pay some tax, but doesn't matter. Now, on interest, just to be clear, on interest, there are various types of bank accounts here in France. There's a livret A, an LDD, there's normal interest. Livret A, LDD, not taxable in France, taxable in America. Okay, so if you have that, you have to tell your U.S. advisor of this interest because it gets reported in tax in France. If the young man here pays regular interest, sorry, sir, I should. If he pays regular interest, he gets interest from a BNP Paribas account, gets $100 of interest, he will pay 30 euros of tax in France.
I would just like to make a note,
Yes.
okay, that when you renew your carte de séjour, visiteur, they do not ask for a tax return, just so you understand.
But they could.
Yes, but they don't. I'm just saying.
I'm here to tell you all, file your taxes. Yes. PEA is a fun one that is outside the scope of this conversation because it depends on.
What was the question?
The question was how many of y'all have worked in France? How many of y'all have PEA, PEAs? Okay, the answer is it really depends on who you talk to. I have my opinion. The answer is Apre d'épargne d'action. It's basically a 401k IRA type of investment. PEA is taxable. It's probably a PFIC. PEL, I have a different opinion on because I think it's a retirement account. It's a complicated area. It's a very complicated area that there's a group called the Tax Gang of all the U.S. tax professionals in France that go back and forth. Now, every now and then it comes up. Long story short, PEA, that question led to 17 emails back and forth. So the answer is it's taxable in America, and we'll talk about PFICs in a second. It's probably also a PFIC. It's because again, it depends. It depends, but it's usually taxable.
Okay, go ahead.
Yes.
Two quick questions. What is the filing date in France?
Okay. Okay, and then what's the second question?
And the second question is, if we were to file a tax return with you, for example, a French tax return,
would we also have to file our American tax return with you, or could we use our
'Kay.
accountant in the U.S.?
The question is, what's the tax deadline? And then the second question is, she was saying how great I am. So, the first question is the tax deadlines in France. The tax deadlines in France depend on two things.
They change every year.
What?
They change
Yes,
every
they
year.
depend on three things, actually. I think. Maybe 2 or 3 things. Hold me to that. First, if it's your first year in France, you have to paper file. The paper filing deadline is usually the earliest deadline. So this year was around May 20. The second year and subsequent years, it depends on where you live. So here we are in 06. The tax deadline is again amongst the earliest if you file on your own or use impôts.gouv. If you use a service such as ours, we have a specialized tax software that we use, which gives us the latest deadline, which this year was June 5th or June 6th or something like that. Okay, but hold on, it gets much more fun. So again, those are the 3 ways it works. Paper, mid-May. Subsequent years, if you do it yourself, mid-May also. If we use it, do it beginning of June. Here's the thing, because y'all are Americans, because y'all love to get your tax returns done early, in France, you cannot. The tax forms only come out mid-April.
That's right.
Okay? So, if you want to see me from mid-April till the beginning of June, come knock on my door. My kids will be more than happy to see you, let you down to my office, because that's where I am. There is no extensions in France. Okay? So, you have from mid-April till mid-June, beginning of June to get your tax return done. The deadlines change, the dates change. So this year, just to give you an example, the forms came out mid-April. We could not file until the beginning of May because our software didn't let us do it because they were still changing certain forms and whatnot. Bienvenue en France. Yes, ma'am. Oh, the second question, I'll get there.
Information that is collected year after year is more or less the same.
You could start. Oh, yes, absolutely. Thank you. So, absolutely. No, you're right. So the question was, when can you start providing information? The answer is you start providing information whenever you want. The thing is, we cannot give you the tax return until the software is ready. Okay, and the software is ready again. Mid-April, the software is ready to roll. They tell us not to file. They tell us not to file until they're really ready. Now, the second question is, does my firm have an issue of just preparing French tax returns and letting your U.S. preparer prepare the U.S.? No, we do not. But that may change in the future. To be seen. The boss is a bit of a stickler, and he's a bit of a haggler. We'll see, but well, you never know. He's a schmuck. He does weird stuff. Anyways, the answer is no. It does. We do French returns for Americans who have U.S. returns as well. Again, to be seen where the future takes us. I haven't changed my rule just yet, but we might. Yes, ma'am.
What happens to those who file the taxes on extension?
There's no extension in France.
I understand by American side.
On American side. On the American side, you could file an extension until October 15th. You could then file a subsequent extension until December 15th. Again, if you're looking for me from around now until the end of December, come on over. I'm doing U.S. tax returns now because this is my busiest time of the year on the U.S. side because everyone has filed an extension and we have to wait for avis d'impôt. So in the French side, what we do is we file the returns for you. On the U.S. side, we extend. Now, if you don't have all your information on the U.S. side, you're going to have to flip and try and get it or estimate it. So, for example, if you have a bunch of K1s that are coming to you, you're going to have to try and get estimated K1s, or you're going to say, you know what, let's use same as last year, but with the proviso that you may have to amend later. The one nice thing about France is you file a tax return April till May or April till June. You could then come around and amend the return without penalties from mid-August to the beginning of December. So basically, the long story short is in France, you file your return by beginning of June. You file it. I don't care if it's a bunch of zeros, bunches of ones, you file it. And then you turn around and you amend it. We had that situation. We had this year, a client forgot to tell us about something. It was absolutely shocking. I could not believe he didn't tell us about this. And he told me about it 2 weeks after the deadline. And he's like, am I in deep trouble? I said, well, you're not in deep trouble. You're going to pay a lot of tax because of this, but you're not going to pay any penalties because we have from August till December to do it. So long story short is you file a tax return by beginning of June. You try your best to get it as right as possible. If you don't have your K1s and they're big numbers, you amend later. Again, that's the practical answer behind it. Okay? So, other filing considerations. What else do you need to think about? Two other things you just need to think about. The foreign bank account forms. On the US side, there's something called the FBAR, the Foreign Bank Account Report, which is basically $10,000 cumulative. I'm going to repeat the word cumulative. Cumulative, cumulative. It does not matter if you have one bank account with $9,900 in it and one bank account with $200 in it. It's over $10,000. You're going to have to file an FBAR. Okay? And you have to file an FBAR for all your accounts. I had a client this week say, oh, I only had one account that had over $10,000. Well, sorry, you have to still file an FBAR for all your accounts. Yes, ma'am?
You're talking about accounts only in France.
Outside of America. Accounts outside of America, you have to file something called an FBAR. I apologize. Foreign bank account report, non-US bank accounts, you have to tell America, here are all my non-US bank accounts. Oh, and again, if they're over $10,000. In France, you have to tell them all your non-French bank accounts, irrespective of how much you own. So, you know, my team, I get twisted and turned up in this and not. Non-French to France. Non-American to America. Simple as that. But be prepared for that. The other one is the wealth tax. Yes, ma'am.
Quick question, sorry. If you have an account in France that's associated with the company that you are responsible for,
Yes.
does that get counted on personal?
If you have a bank account that you have signatory authority on, you report it on your FBAR.
Yep. Yes.
Okay, so if you are a member of the American church here in Nice, is there an American church here in Nice?
Uh-huh.
Great. So if you're a member of the American church in Nice and you've got signatory authority because you're the treasurer, you're putting the American Church of Nice's bank account on your FBAR.
That's right.
Simple as that. So if you have signatory authority, you have to report that bank account. Yes, ma'am.
So does the same hold true if you're a signature on an American
No.
business account?
Oh, on the French side, yes.
That you have to file that in France?
Yeah. Yeah.
For a corporation? That
Yeah.
You're just a treasurer?
I would report to France any bank
There's no
account that
reason not to.
There's no reason not. France, you don't have to tell them how much it is. You just have to tell them that it is. The penalties are $1,500 per bank account. I would report all bank accounts, all financial accounts.
Even
to
ones
France.
you don't have.
Well, here's a story. I'm working on an audit. Bob Smith got an audit. They asked a variety of questions. In their thing, they asked Bob Smith, they said, hey, Bob, we just noticed you have these two UK bank accounts. So I called Bob and said, hey, Bob, you have these two UK bank accounts that they're telling me about. I've looked in all my documents from 2019 onwards. You've never told me about these accounts. Bob's answer was, I left the UK in 2007. I thought they were closed. The French authorities found them. Okay? Bob's probably going to have to pay money. We're trying to make Bob avoid paying money, but I'm not hopeful. Okay? Long story short, file your...
How could he not know he had these accounts?
He thought they were closed.
Okay.
He thought they were closed. He thought they were closed. It
yeah,
happens.
right.
It happens. But long...
On that,
Yes.
Technically, like Vanguard isn't a bank, it's an investment.
Yes, you file Vanguard.
For 1 day.
So just to be clear, because her question made a very valid point, do not try and be smart about this. If it's a financial institution, you file it. Okay? I don't care if it's a credit union, it's a bank, it's Vanguard. You file it to the French authorities because they could find out, and if they do, it's €1,500 per bank account of penalties.
For 1 day.
I go for 401ks included too. I go 401ks, I go IRAs. There was a whole debate about this. There was a court case 2 years ago. Long story short, Adrian sent me an article from a court case, and basically that person got slapped on the fingers. I take the position of reporting it. There are other firms that don't. I'm more conservative. I just report it because, again, why the heck not? That's exactly the issue. But the answer is I do. Again, that's where we'll talk about wealth tax in a second. The only place where 401ks, IRAs, people did not report it in the past was because it didn't get subject to wealth tax in the past. For now, it doesn't matter. I'm coming, Pat. It doesn't matter. But long story short, I would report them all to be safe. Long story short, report them all. keep your peace of mind. It's not worth hassle. Okay, sorry, one second. Patty's got a question.
Where do like Wise and Revolut fall in that mix?
Wise and Revolut, I report. They are bank accounts.
On which side?
Both.
On both.
On both
If
sides.
you have money there.
Yes. If you have a bank account, Wise or Revolut, you report it on both sides of the continent, of the world.
What if you're just transferring, you don't keep money?
You still report it. If you have a bank account open, you still report it. You still report Wise, you still report Revolut. It's not worth, again, it's not worth the hassle of the potential penalties. I really don't believe it's worth it. Yes, sir.
Is there a de minimis amount that you have, that you earn or you have in, not earn is not a good word. Is there a de minimis amount of asset income that you receive from like a French bank, your interest, maybe $200-300 a year? Is there a de minimis amount where you do not have to file a return?
Do you have U.S. pensions? U.S. Social? Yes, you have to file a return. Is there a de minimis? Again.
No, if you're here on a visitor, then you can have assets.
And you're not here in France? You're not a resident in France?
You're a temporary resident. You're not a...
Long story short, if you're here in France and you're a tax resident, you file a tax return.
Maybe my question is that. What makes you a tax resident?
Your center of vital interest. It looks at your life. It looks at where you're here, you're probably a tax resident.
Is it a 6 month and a day?
No, not 6 months in a day. That's the slides we talked about before. It's center of vital interest. It looks at where you're living. Looks at your whole life situation. So it really depends. The answer is it depends. Yes, ma'am.
Are you saying that all retirement accounts, like 401ks, they're not really bank accounts, but they are money that you...
They're not catching on here, for Jonathan.
All financial accounts should be reported to the French authorities. There was a court case a couple of years ago where the individual did not report IRAs, 401ks because they were seen as pension, and they said, we're not reporting it. They came down and slapped him on the fingers. I would report it. Again, this is one of those cases where I'm being conservative. There may be other colleagues who say, no, I don't want to report it because I don't think it falls. I go conservative because, again, I like to sleep at night. I like feeding my kids, and I have to do it for a long time. But long story short, it depends on who you talk to. I go with yes, you file. I've had colleagues who said no, you don't, but I go with yes, you file.
But there's no reason not to
file. There's no downside to file.
You're not paying any taxes
No, there's no
on
downside.
it.
It's an informational return.
Exactly.
Yes, ma'am.
You'll like this question.
Shoot.
You're going to be doing my taxes. My tax guy in the U.S. was like, I'm not touching you once you move out of the country.
That's possible.
So that, don't like it, not doing it.
Yep.
Doesn't it seem to, as I'm listening to you, it seems as though it would be more streamlined to have you do both American taxes and French?
Absolutely. Because again, bienvenue en France. La main gauche ne parle pas à la main droite. Mais en Suisse, où je travaille, et dans ma société, la main gauche et la main droite sont ensemble. So, simple as that.
You're getting a discount now.
It's as simple as that. That's the advantage of working with a firm like ours. At the end of the day, we help when we do your French return. Like honestly, what happens is the way timelines usually work on our side is we do the French return first. When we do the French return, a lot of times this year, I looked at the French return. I was doing the French return, moving on with my day, and I saw someone. Oh my God, he had $100,000 of IRA distributions this year. I got one of my guys. I had a guy in the U.S. who I was calling him my rover, like in softball. He was going everywhere. He went off and he prepared the U.S. tax return at that minute. So that's the advantage of our firm is that we even if we're going to work on your French return, we will look at it from a U.S. perspective and a French perspective at the same time. Again, so I apologize. I don't like being a salesman too much. I'm not very good at it. But long story short, that's the advantage of a firm like ours is we can help you with both the U.S. and the French returns and move forward that way. Okay? So second filing consideration is the wealth tax. For now, the wealth tax is a minor issue. It's called l'impôt sur la fortune immobilière. It's an income tax on real estate. It's a real estate surcharge. Okay? It's up to 1.5%. The 1.5% only kicks in if you have over 10 million euros net of real estate. Okay? And it only applies on French-sourced real estate for your first 5 years here in France. Okay? So long story short, it only starts at 1.3 million euros net.
Yeah.
Net. So Adrian most likely has to pay wealth tax. We're all sure of that.
No, because of the mortgages.
Debt. Oh, there you go. So to offset
That's an
you have debt.
advantage to having a mortgage.
Exactly. There are advantages to having a mortgage. But basically, the wealth tax kicks in at 1.3 million euros net. So if you go out and buy a place on the Palais d'Anglais, again, still really cheap, much cheaper than I thought. Renting on the Palais d'Anglais is not expensive.
No.
Long story short, you go out and buy a place over there, $2 million, you have no debt, you have wealth tax. Okay? Wealth tax kicks in at 1.3 million euros net of real estate. Okay?
What's the net, Jonathan?
Net, oh sorry, what is net? Net is something that I catch my balls on. No. Long story short, net is you buy property for $2 million, you have a $500,000 mortgage, 1.5 million net. Simple as that.
Right.
It's
So the only net down is a mortgage.
is a mortgage, yeah. There's a case of a family loan recently that I was reading about, where basically they took a family loan to buy a property that worked in that specific circumstance because it was a loan towards the purchase of property. But yes, otherwise it's mortgage is usually the only way to do it.
And I just realized that I report this, but my properties are almost all owned by my daughter.
There you
so
go.
they're not even.
So
They're
and wealth
not
tax.
even mine.
So wealth tax in the case of someone who's not a French resident, wealth tax would still apply. So I have clients who have, $3 million, $4 million piece of property in Paris. They pay wealth tax even if they're not French tax residents. Yes, sir.
That's only for property in France.
That's only for property in France for the first. It's only for property in France for the first 5 years. After 5 years of being in France, it applies to your worldwide property. So I had another story. I had a client, Bob Smith. Bob Smith bought 2 pieces of property in Boulder, Colorado in 2008. For anyone who knows about the U.S. in 2008, it was a good time to buy 2 pieces of property in Boulder, Colorado. He bought 2 pieces of property in Boulder, Colorado. He comes to me and I said, okay, Bob, how much are these 2 pieces of property in Boulder, Colorado cost? They're worth about $1 million. No, $100 million. Sorry, not $1 million. $100 million. What's your mortgage, Bob? $20 million. Okay, Bob, you have about $80 million net. If you stay in France, you're going to have to pay this much wealth tax. So long story short, Bob stayed in France 4 years and got out of Dodge. People do leave. And this is the reason why you have to. This guy had to leave.
That's really a shame.
But it's a lot of money.
Because life is not about money.
No, but this was a big one. This was a lot of money. This is a lot of money, Adrian. Paris is nice, but this is a lot of money. Yes.
Right, he's still going to eat 3 meals a day. You got it.
Sorry?
Did you get the question in that scenario? If for some reason, let's say you're
Okay,
in
Bob Smith scenario.
family home,
Yeah.
and you decide, okay, I don't want to be a French tax resident. I'm going to go back to the U.S. as much as it pains me, and I then return to
So Bob Smith left after year 4. If Bob Smith comes back within the next 5 years, Bob Smith has to pay wealth tax. So Bob Smith is no longer here in France. He comes whenever.
He's losing out, okay?
No, he comes to France. He comes to France like 3-4 months a year. It's always very funny because whenever I call Bob, I'm like, Bob, where are you? He's like, I'm in Paris, or I'm in Vail. Like I never know where Bob is. But long story short, you need to look at it. If your net value of your real estate, net value being fair market value minus mortgage, is over 1.3, you may have wealth tax.
How do they determine the fair market value in France?
Good question. So, in France, they do it by an appraisal. Either you give it to them and they can figure it out, or you got to go get a realtor. And Adrian, correct me if I'm wrong. It's like 300-400 euros to get an appraisal on a property.
Wait, I want to make sure I'm on.
No worries.
I don't know. I don't think it's on. An appraisal?
Yeah, for for wealth tax purposes.
We do them.
Oh, you did them. Okay.
Yeah.
So another reason.
It's a little more expensive than that.
All right, fair enough. I have no idea how much it costs. Sorry. Yes, ma'am.
So I bought a house.
Yes.
I paid that horrible thing.
Yes.
And then I renovated it. They don't know.
Yes.
When do they know?
I don't know. I honestly don't know. I don't know. So the answer is eventually they're going to ask for a new appraisal. They could always ask you for a new. if year over year you say your property's worth $2 billion, and again, I'll use Paris again. France is not just Paris, folks. You guys all know that. I made the mistake last week of a woman came to me and she goes, "Are you in Paris?" I go, "No, I'm not in Paris." She said, "Sorry, I'm gonna get your answer." Go ahead. She goes, I go, "No, I'm not in Paris." She goes, "But I thought you were in France." The worst was I took underneath my desk. I have one of those desks, the note writers. I took it out. I held up the map of France. I said, "This is France. This is Paris." My wife who was upstairs came downstairs. She goes, "What the hell are you doing speaking to a client like that?" I'm like, "I don't know. I had to teach her geography. I'm sorry." And that's how Jonathan lost all his business.
You're from London.
Oh, yeah.
And then they got really confused.
Yeah, exactly.
Oh
So in terms of your question, how would they know? Honestly, they may ask you for a new appraisal. That's how they would probably know. Again, if in Paris, Paris, let's say you have 100 square meters in Paris and you're in a 12,000 per square meter area and you keep on reporting it as that, you report it much lower, they might ask you for an appraisal. Again,
Jonathan, in all reality now, the Chambre de Notaire and the NCI produces the statistics every month.
Yeah.
They know basically what the price of real estate is.
Yeah, so basically,
in essence, they know.
Yeah.
They don't really even have to ask you.
Yeah, so long story short.
You've done a rennet. Like a big.
Like if you make your property much better, they won't. But long story short, if they're saying in Paris it's 12,000 per square meter and you're reporting it as 6, you're going to get a question.
Right, exactly.
Yes.
If you do a renovation like that, can you ask for?
Yes.
Okay, great.
You can ask for an appraisal and then go from there. Yes, sir.
What is the wealth tax rate?
The wealth tax rate is up to 1.5%. It is not a big tax, but it's up to 1.5%. It's only if your net value is over 1.3 million. But again, it's really it depends. It's slow. It's a slow grade. It's not something to worry too much about. Bob Smith had to worry about it. But if your property's worth $2 million, it's not a huge tax.
If you compare property tax in France to property tax in the U.S. and then think about the wealth tax. The wealth tax is so minute in comparison to the property taxes you pay on property in the U.S. It's not even. Don't lose an ounce of sleep over it.
Yeah.
I mean, in all fairness.
Yeah.
Right.
It's a real estate surcharge.
Well,
Barb.
Okay, Jonathan.
Yes.
Now I'm freaking out because I realized I never told Danielle about my wife's account.
We'll talk about that later.
Second thing is, am I going to
Wife.
Nah.
The second thing is, for the wealth tax, do you pay the 1.5 over?
So here's where it gets funny on this one, the wealth tax. I said 1.3 million euros net. So again, Bob Smith comes, he has a property of 1.4 million euros net. He starts paying wealth tax at everything over 800,000. Because why not?
Because that's how it works.
No, I know, but why not?
Right.
Why not make it more confusing? The first 800,000 goes free.
That's
everything
right.
over 800,000 is taxed. We can talk about that, but I don't believe you pay wealth tax.
No,
But
I haven't, but
we could talk about that. Don't worry. No, nothing to worry about. Everything's.
I don't have to worry, you're my guy. But
Yeah, we'll get it. We'll make it work. This is the Brian Dunhill slide, folks. For those who don't know Brian Dunhill's got a nice book coming out on September 30th, 99 cents on
Borderless
Amazon.
living.
Borderless living with his nice dog, which, he's got a nice attachment to it, on his boat, which he's invited me to go to, and I told him, no, Brian, you will never catch me on that boat. I'll send you my kids. You take my kids for a couple of days. They'll go with you. Me with my 2 left hands, I'm not coming with you on the boat. So, this is the Brian Dunhill slide. I am not paid by Brian Dunhill to bring this slide out, but honestly, he should. PFICs, passive foreign investment companies. I'm bringing this up just to make it clear. Passive foreign investment companies are like every other 4-letter word, not something very nice. They are passive foreign investment companies. That means basically it's a foreign mutual fund or foreign ETF. It's a company that makes most of its money through passive means. Mutual fund, ETF. And basically, long story short, the US does not like that you have investments in foreign mutual funds, ETFs, so therefore they will tax you at the top rate and potentially charge you interest. Long story short, they are punitive from a US tax perspective. Try to avoid them at all possible. Okay? That's all I've got on this slide. Okay, so We have now turned over to the part of the session where, as I said, if you have a trust, pay attention. Please, please pay attention because this is important and the penalties are ridiculous here. France does not trust trusts. France sees trusts as a potential money laundering vehicle. Therefore,
Which it is.
Long story short, if you have a revocable living trust in the US, which I would have told every single one of you to go out and get if we were having this conversation in Arizona, you will have additional filing requirements in France. And remember that bee's knees for American retirees? Well, guess what? It no longer applies if the income comes from a trust. So, for the purposes of this discussion, I'm not going to go into everything. If you have a trust, you need to speak to someone quickly. Okay? If you are coming to France and you have a trust, have a conversation before. I am not the person who comes in with fear tactics. Not my job. I make money my other ways. I'm not here to scare y'all. I'm here to tell y'all the truth. Trust problems. Point. Okay?
So, are you saying if we have a trust and we're here now, immediately call the lawyer and do it? Revoke it?
I'm saying if you have a trust, have a conversation. Because it depends on your situation. It depends on your situation. Everybody's facts and circumstances are different. But if you have a trust and you're here, you probably, and your plan is to be here for the long term, you may not want to have it. Trusts could lead to an annual filing where you have to tell the French authorities, hey, I have a trust, here are the assets held in trust. All right, whatever. It's more tax prep compliance fees for us, but still not the end of the world. There's event filings where basically anytime money goes in or out of the trust, it potentially is a tax return filing. Well, guess what? If you have in your trust your checking account and you go buy an ice cream across the street, you've just filed an event filing return, sorry. So there's 2 compliance costs. All right, not the end of the world. The last one, and I didn't want to spend too much time on it, and I'm not going to spend too much time on it. There's a court opinion that basically says any income generated in a trust is not the income of the person who set it up. Therefore, if you have a trust and you have interest income from Chase Bank, it flows down to you, from the trust down to you, it no longer benefits from the treaty. So basically, a trust is quite a negative vehicle from a French perspective. So having a conversation ahead of time is as important as possible. We have a person who is specifically dedicated to trusts on our team, who helps Americans with trusts. Our recommendation, wherever possible, is yes, to not come to France with trusts. If you, again, there are ways around it, but it depends, again, facts and circumstances.
I mean, we set up a trust as part of our, when we die, but that still needs to be undone.
Maybe. But your facts and circumstances are such that I'm not worried right now. Right. I'll be worried eventually for you. No, but your facts, I'm being serious. Your facts and circumstances don't worry me that much. But they will eventually when someone else comes to France.
Right.
So long story short, facts and circumstances win the day. Okay, yes?
Okay, what if you have a trust, but the only thing in the trust is real estate, and all of your cash accounts are payable on death to the trust?
Should be okay. But you'll still have a trust filing to do. You'll still have those 2 annual filings. You cannot sell that property if you're in France for the trust, or else you may not get, France will want to tax you on it. So again, there are certain things that need to be looked at, but yes, if it's basically, here's the long and the short. If you come to France and you need to have a trust, have no income producing assets in it.
Okay.
That's as simple as that, yes.
So if you dissolve that trust before you come, they're not going to, like mid-year, they're not going to retroactively go back and
No.
do it?
No. If you dissolve the trust before you come, it's not a problem. Yes, sir.
If you have trusts, can France be your second home and America is your primary home?
Facts and circumstances. It's as simple as that. If you have trusts and you need to have trusts, facts and circumstances, you may not want to become a resident. But if you're a resident, then you've got to file. There's trust filings to be done. It's as simple as that. Again, everything comes down to facts and circumstances.
How do you avoid becoming a resident?
It depends on where you live. It depends.
Ralph, have you been listening?
It depends on where you live. Sorry. It depends. Again, everything comes down to specific facts and circumstances and where you're living and how you're living your life. So honestly, it depends. The answer is it depends. Yes, ma'am. I'll come, Barbara, in a second.
In France, what do they use instead of trust?
They don't have they don't have something like this.
So basically, you'll just, when you die, if it's not in a trust and it gets left to someone, they're going to pay their wealth tax on it.
The
Inheritance.
We're going to get there. Just wait. I'm about to freak you.
Would you go to inheritance tax? Are you about to go to that?
I'm going to inheritance tax. Oh, yeah.
Okay.
There's a reason people leave. Adrian says people don't leave. They leave when they hear me talk about inheritance tax. So therefore, Adrian doesn't want me to talk. No, but long story short, we'll get there. Yes, ma'am.
Okay, really
But
quick.
I'm going to talk about it fast.
Jonathan, Americans say, oh, what did you get? You got rid of your trust? I said, well, Jonathan told me I got to get rid of my trust. But if you really want to understand why France is obsessed about trust, just go on Google the Wildenstein Gallery trust fraud case. It's all there.
You okay with me talking about it?
Yeah.
It's
Oh, we have
seriously,
20 minutes.
It's out there. It's a big deal. And,
Long story short, it's a problem. So if you have a trust, conversation needs to be had. It's as simple as that. Again, I'm not a fearmonger, but I'm here. This is the one part where I'm just jumping up and down and say, if you have a trust, talk to somebody. We have a specialist on our team who can help you with this. It's not the end of the world, but having a conversation is important. Okay? So, gifting in France. I'm going to go relatively quickly because I want to talk about inheritance. I'm going to go quickly on the next two things. Gifting in France. If you make a gift to someone in France, it is subject to French gift and estate tax. So it is a potentially high tax. If you gift to a child, it's up to 45%. If you gift to a niece and nephew, it's up to 55%. If you gift to me, it's 60%. So it is relatively high. So if you gift, there will be potential French gift taxes. If you receive a gift from a non-American person, so again, this has happened to Adrian. Adrian was walking down the street a couple of years ago. A man walked by and said, Adrian, I've heard you speak. Let me give you a gift of $200,000. And Adrian said, thank you very much. And then she said, okay, I just got $200,000 a gift. I said, great, we now have a filing requirement. So Adrian had to file. This did not happen to Adrian, to be clear.
I wish. It'd be great.
To be clear, I'm making a joke. But if someone comes up to Adrian and says, here's $200,000, and it's a non-U.S. person, there's a U.S. gift filing requirement. Okay, it's Form 3520. So again, if you receive a gift, again, this usually happens when I have clients who say, I bought a house in Nice. My parents just gave me $1 million to buy the house in Nice. Cool. You have a U.S. gift filing requirement. Just understand, if you receive a gift from an American, over $100,000, just to be clear. From a non-American, you may have a gift file. Okay, so again, Bob Smith, French guy, gives you over $100,000, potential U.S. filing. You gift someone, gift tax. You receive, maybe a filing on the U.S. side. Yes, ma'am.
So what if I gifted my sister?
But you're a U.S. person. If you're a U.S. person to... Nope, U.S. person to U.S. person. If you gift to your sister, you would have to pay up to 45% gift taxes in France.
To give her money?
Yes, ma'am. On anything over a certain threshold, and I don't remember the threshold on sisters right now. It's on anything over a certain threshold. There's thresholds. So to children, it's €100,000. You can gift to your children the first €100,000 tax-free. Anything over that, subject to gift tax. Siblings, I don't remember. I think it's 16,000, but I might be wrong. So I'm not.
And is that a one-time?
It's once every 15 years.
Okay.
Yes. Yes, ma'am.
I just want you to clarify, you said over 100,000. So
If
you're supporting your child in grad school in France.
That's not.
You're an American person. It's a gift from a non-U.S. person. If you receive a gift from a non-U.S. citizen.
No, that doesn't apply. My daughter lives in Paris, supplying her with money to go to college. Okay? I'm retired. I'm not a non-U.S. citizen, and I'm not. Well, I probably will be a French tax. So what's the threshold for that?
Basically,
That was my question.
And what is like if it's
the daughter. Honestly, it depends. How much? It depends. If you're giving her $500 for Christmas, no filing. If you're giving her $20,000 a year to live and whatnot, you probably have to file a gift tax return.
So there's not a limit.
No. But again, it depends on the gift and the quantum. But basically, because the problem is on gifts specifically, is when you die, France can go back and look at your bank accounts for years. And if they see a bunch of gifts over time to your daughter, they may come back and hit your daughter with gift taxes in retroactive. So it really depends, facts and circumstances. Again, small gifts.
Paying for college?
Paying for college is also living expenses and what. Again, it depends. Okay.
Is that if you're I'm paying for my grandson's college, so is that like a gift? If
Potentially.
He's in the U.S.
Potentially.
Okay.
Potentially, gifts made from France as a French resident potentially have a French gift tax. This is again something that's done with a notary or an attorney. But again, just note, if you give gifts while here in France, you may have French gift tax filing requirements. It's as simple as that. Yes, ma'am.
What if you gift it from a U.S. account?
Doesn't matter. France finds out if you gift as a French tax resident, even if you gift from U.S. account to U.S. account, you're subject to French taxes. Okay? So, inheritance.
15 minutes.
15 minutes, good, because I'll go quickly on this. Don't die here, people. Don't. Just go away. No. French inheritance taxes are relatively punitive. Again, it depends on to who you give the assets to. But if spouse to spouse, no inheritance tax in France. But if you gift to your children, they will pay up to 45%, and the 45% kicks in at 1.8 million. If you give to sisters, 45% kicks in at 24,000 euros. If you gift to nieces and nephews, 55% kicks in at 7,900. Bob Smith the mailman, 60% at 15 or 1,600 euros. So long story short, France inheritance taxes are relatively heavy. France also has forced heirship. France also has forced heirship in that France, if you die in France without a will, a US will or a French will, France will force the inheritance their inheritance rules on you. You can make a choice of allocation countries. You can pick not France, okay, if you're an American citizen. Do you have water in that pitcher by any chance? Sorry.
Oh, here. Sorry, Jonathan.
I'm sorry. I'm sorry. I'm just.
It's
it's hot. I'm sorry. I'm sorry. Basically, long story short, and I forgot where I lost my train of thought. What was I talking about? No. Basically, France forces forced heirship. You could, if you have a U.S. will and a French will, you could potentially bifurcate the allocation of assets. Okay. We are working on getting a U.S. attorney onto our team. This is something that Brian Dunhill has been down my throat. We have to make it a state planning team. We have to make it a state planning team. We are almost there. Come see me at 6 o'clock tonight. Hopefully, I'll have good news for y'all. Basically, you'll need to have a U.S. will.
Not that one.
Oh no! No. We're not talking about that. Oh no. French will, U.S. will is necessary. Okay, you need a U.S. will. You need a U.S. will. You need a French will. The French will basically say something along the lines of, "Hey, go look at my U.S. will." The U.S. will say what you want, but you need a French will and a U.S. will. Okay.
But they'll still take your money.
Yeah, they'll still take your money, but at least your allocation, at least spouse won't have to deal with sister-in-law, brother-in-law, and whatnot in the allocation of the assets. Spouse will get the assets, or some cases you've got children you want to disinherit. France doesn't let you disinherit.
Even if you don't have children, then you've only been married to one person.
Yes.
You should have a will in each location.
Yes. Yes. Sorry. Oh, no. That's true, but what I would always... Now, this is something that comes down to choice of person you talk to. The attorney I work with, Carol Vangioni, who I like quite a bit, both have told me it's fine, but you're better off having a French will.
Absolutely.
To basically refer back to the American one. That way, there's no doubt. And the French are better at wills than Americans, period. I'm not going to... This is not debatable. No. If you start over, you start in America, you do the American will, and then get a French will to refer to the American will.
That's it.
It's as
Real
simple.
short.
It's as simple as that. The French will is really short. It's handwritten. It's basically, hey, when I die, go look at my U.S. will. Thanks a lot. Bisous. Bye bye.
That's right. That's
It's
right.
It's as simple as that. You sit with a notary. You sit with an attorney. It's relatively simple. I apologize. Yes, Paul.
Yes. So do not die in France. Does that mean do not die?
Do not die French.
As a
Tax residence.
As a tax resident. So if you're traveling and you die in America, you're still going to get hit.
Yes, if you're a tax resident of France and you die in America, you can die in Timbuktu. You'll still get hit with French.
Okay,
But-
so let's say you know your end days are near and you want to plan and you want to leave your tax residency and move to another country or to the U.S. Is there like this time frame?
I don't have one. I don't have one. Basically, again, it's one of those things. Like again, you get sick, you leave, you die a couple months later. France could always come back. You get sick, you leave, you die 5 years later. France probably doesn't have anything on you. But really, it's case by case, facts and circumstances.
Yes, but it's a really good reason to buy property
Yes. Well, property.
because you can buy in your kids' names.
Yes. There are ways.
There are
Estate
ways.
planning has things that go in. This is a quick, just top of level, high level thing. If you have, you're next time. If you have, if you need, this is again something that needs to be looked at case by case. Again, I apologize for continuously saying this, but it really is the facts. Everybody's case is different. You know, there's usufruit. There's usufruit that could be used. There's all sorts of vehicles that potentially could help you minimize your taxes. But in general, France will tax you. France will potentially force the heirship on you. That's why you'll want a U.S. will and a French will, and you'll take it from there. Okay?
I would like to remind everyone that we're talking about your heirs.
Yes.
It's what your heirs will pay.
Yeah.
So maybe some people don't care. No. I had clients recently that said they didn't intend on leaving anything to their kids, and they didn't care.
I have that.
Wow.
I have that said more than a little bit. I have that said all the time. Yes, ma'am.
Yes,
Taking advantage of the tax treaty, you haven't paid any taxes to France.
that's right.
And if they take my money, I'm okay.
That's right.
This will apply. French inheritance law will apply on your worldwide assets. When you die, they're going to want your worldwide assets. They're going to look at your worldwide assets. So you can have all in. The only thing that doesn't get included on French inheritance tax is foreign real estate. So if you have foreign real estate, U.S. real estate, that does not get included in your inheritance. Again, everyone's facts and circumstances are different and need to be looked at. Yep.
I have a follow-up.
Yes, ma'am.
You haven't addressed this, and I don't know if you're prepared to. But what about crypto?
I don't know. I would assume it's taxable in France. I would assume it's taxable. Crypto's the worst. From a tax perspective, crypto's worst because there's no answer. It's the wild west. It's the wild west right now. But I would assume it's taxable in France. I would assume so. But it's as simple as that. Yes, ma'am.
My question is, what is the relationship to a long-term visa, TS, to French residency? How do they relate?
They don't.
Okay.
Immigration one thing, tax another.
You can have a long-term residency, but you don't have to be a resident of France.
Tax residence.
Tax residence. Immigration, taxes. Two different things. I have a really nice friend. His name's Daniel Tostado. I'm on the phone with him all the time. I tell him, Daniel, I don't agree with you. He goes, I don't agree with you. And we wind up saying immigration and tax, and we move on with our day. Okay? It's as simple as that. Immigration says one thing, taxes say.
French health care, does that trip things towards becoming tax
Yes.
resident?
Yeah. The more ties to France, the more closely you're going to be a resident in France. As simple as that. Okay? So, remote workers, immigration and taxes don't agree. Talk to your immigration attorney, talk to your tax attorney. They're going to say two different things. Talk to your tax attorney. Thanks a lot. Next. Things to watch out for. Things. No, but seriously, if you're planning to be a remote worker in France, talk to a tax attorney before. Do not simply rely on an immigration advice. There's immigration, there's tax, there are two different kettle of fish. I am sorry, you had a question earlier and I missed you, and I'm so sorry. Long story short, talk to both sides. Yes, ma'am, you had a question.
If you leave everything to nonprofit,
If you leave things to nonprofit, you probably don't pay French taxes, but there are certain rules. You have to talk to a notary about this. Because there are certain, you have to talk to a notary about it. That's, again, I don't deal with it. I'm trying to build up a team of specialists, and I have a French guy. I'm hopefully going to have a US person also soon. Long story short, talk to a specialist. I don't know the answer. Okay? Things to watch out for. 3 main things just to watch out for if you're here in France, and these are just high level. Again, foreign mutual funds, foreign ETFs, don't invest in them. Do not go out and set up a French company willy-nilly.
I agree.
I will not do your tax return if you go out and set up a French company willy-nilly. If you go out and decide to buy a laundromat in France, which maybe or may not be somebody, people. Long story short, there's conversations that need to be had on the French side and the US side. Okay, so again, be careful about that. And then last but not least, and this one here is important, I say this honestly to avoid people screaming at me. But I say it because it's God's honest truth. The French tax authorities, you have to remember, you are a minority here. You are not the majority here. You are a minority. Even though there's a bunch of Americans here, the US tax treaty, they don't see it all the time. So they will make mistakes on your tax assessment. If they make a mistake on your tax assessment, there is ways to contest it. Okay? Now, if we do your return, I will give you a tax return. I'll say, okay, we estimate your taxes are going to be X. If they come back and say it's going to be X plus whatever, we will contest it. Okay? If you do the return on your own, which has happened a couple of times in the last month, 9 times out of 10, it's usually that people make a mistake. Unfortunately, when DIY is a very costly 3-letter word. Okay? You know, people say, I can do my own French tax return. I said, cool, go for it. And then they make a mistake. You're left shrugging your shoulders. I've made quite a bit of money in the last month on 3 people who've come to me to correct their mistakes. And they're all simple mistakes. It's not my fault. I didn't make the mistake. So I said, okay, look, it's going to be this to fix it. And we do it. And then they get it all back, which has worked every time. But you got to be careful. So again, in a case where we tell you the tax return is going to be due 0 because the bee's knees for American retirees, and they tell you it's $5,000, it is not our mistake. It is the tax office's mistake. Here in Nice, they make mistakes. They make mistakes. In Paris, they make mistakes. Around the rest of the country, they make mistakes. So if it comes in higher than what we estimate, because again, in the case of the gentleman here who's got 100 euros of interest, he should owe 30 euros. So if it comes in at 30 plus whatever, we contest. Okay? It happens. Do not panic. It's not a problem. It usually gets resolved within 1 letter, and the 1 letter usually takes about a week to 2 weeks for them to process. But if it happens, calm, move on. Okay? Exactly. So, that is it. My name is Jonathan Hadida. We are Hadida Tax Advisors. If you have any questions or want to set up a consultation, hello@hadtax.com. And thank you all very much for taking the time. How did I do?
Did perfect. Thank you, Jonathan. Thank all of you for coming. I hope this was helpful to you. And it was recorded, so you will be able to watch it again. And if you have any questions, you know who to talk to.